Hello and good morning. Welcome back to the channel. So today we are going to be analyzing one of the companies which I feel is exactly contrary to what has been taught to us in finance classes. It has all the characteristics of being a low risk company with a high probability of return. In finance, we've always been taught that to get higher returns, we need to take higher risks. But according to my opinion, this stock is, and I'll lay out the details in front of you, and then you can make your own judgment. But I feel this has all the potential of being a very low risk business listed on the stock market with a high potential of return. So the company we're going to be discussing is PTL Enterprises. I'll just give a brief background about the company. PTL Enterprises was in the business of tire manufacturing. Tire manufacturing being a very high barrier to entry business with very high capital costs. And it did start in 1959 and it did manufacturing till close to 1995. And in 1995, it got acquired by Apollo Enterprises. Um, and it's been leased out to Apollo Enterprises ever since. And Apollo uses the factory really to produce tires for the larger commercial vehicles that it makes. And it pays a rental income back to PTL Enterprise. So what we see here, and I'll just lay out the details in front of you. So the entire business is available for 576 crore. What's interesting to see is when I initially did start analyzing the stock was available for a PE of 10. So 10 and less than 10. Right now it's run up and it's operating at somewhere close to 28. So I think ROC and ROE for now we'll leave it out because I think within this business it doesn't really apply because it's really collecting rent. If you see here, the dividend yield is close to 4.03%. A lot of us are firm believers in being an investor in real estate. In fact, 95% of Mumbai's asset really is in physical assets and real estate. Real estate with a rental yield of 2.5%. But here we see a stock with a dividend of 4.03%. When I did start initially looking at it, it had a dividend yield of close to 11%. And that was a couple of years back. There is no pledge. There's no pledge. There is no debt in the company. The book price to book value is 0.78. So book value being the value of all the assets within the balance sheet. So the price to book value is 0.78. And what we are really seeing here is that the book value is lower than the price. It's quite unheard of, and businesses like these are really hard to come by. And really, we see here that the market cap is 576 crore, whereas it owns shares within Apollo. So in FY23, it made an investment of shares of 343.7 crores. And if you see here, as we were talking, that most of the income that is coming out of this business is from rental income, 89%. So and within that they have escalation. So we can quickly go down the financials and see it. If you look at it, the yearly financial, the profit and loss statement, we see that in March 2015 it was collecting 40 crore, and then it increased to 46, and from here we are seeing that currently it's standing at 64 crore, and you'll see that the numbers are consistent. So here, if you see since March 2019, it's consistent, and then there will be an escalation to factor in inflation and those kind of things. And if you really look at the expenses, really admin expenses, and here if you see it's gone a touch higher to 9 crore, but just looking at the operating profit margin is hovering around above 90%, and it just touched a little bit tad lower than 86%. So the entire business is available for 526 crore. It has shared investment within Apollo Enterprises, Apollo Tires, for 343 crores. And the reserves of the business. So if we look at the balance sheet and we see the reserves as of September 2023 is touching close to 722 crore. And what we are seeing is that the assets in the book is more valued more than what the entire company is valued at. So I've laid out the facts in front of you, and we've heard a lot of times that we need to really take high risk to make high return. And just to be sure as to how the stock has performed in the last few years, if you look at this, so in the last 10 years, the stock has given a CAGR of 23% return. In the last 3 years, it's given 32%. And for money to really double in within 3 years, it takes close to 26%. So if you were invested in the last 3 years, the money has not only doubled, but on that money, you would have been getting a dividend yield of close to 10% at that point in time, and obviously reducing because the stock price was increasing. So, so I would really love to know the view of the audience and people watching as to what do you really think about this company, and do you really think there are enough legs within this to keep going? Because from where I see it, it's highly mispriced, highly not valued up to the appropriate mark, and that is the beauty of an auction driven market like the stock market, right? Because um, not everybody will go for Apollo tires, and people will go for companies. So Apollo tire in the same segment, so Apollo owns it but is paying out a dividend of 0.82%, and really is valued at 30,000 crores. So this is a much smaller company, which has returned the last 10 years 23%. Whereas if you compare Apollo in the last 10 years has returned 11%. So it doesn't really matter what the news channels say or the business channels say. Sometimes you really need to dig deep and try and find out about the business. And the result is that you will find such beautiful gems hidden somewhere. That's it from me today. Thank you so much. Hope you have a lovely day ahead. Thank you. Bye.